Joining us now is Morningstar analyst Laura Lutton to get more into this topic. Laura, welcome to you first.
Thank you. Thanks for having me.
Okay, so tell us, explain why are these target date retirement funds, which are of course designed for security, loading up on junk bonds?
Well, you know, we see quite a bit of disparity in target date funds, particularly for investors nearing retirement. In the asset allocation, we see some series fairly conservatively positioned with not a lot of high-risk securities, be they stocks or bonds, and then we've got others who are taking more risk.
Is there an advantage for the portfolio manager to stick those junk funds in there?
Well, junk bonds have performed great this year, so the target date series that do have more exposure to high yield bonds have done well. So there's an advantage there, but you know there's also added risk when you go into the junk bond space.
And that's the problem, right? This risk, and for the investor discovering how much risk he or she is taking, perhaps you might not really realize it, right?
That's true, and you know, a lot of target date funds are structured as funds of funds. So really digging in and figuring out what's in these funds and what the risk spectrum is can be a challenge for individual investors.
Okay, so what do you do? I mean, how do you discover that?
Well, Morningstar can certainly help. We would show you in that fund-to-fund structure what the individual fund's exposure is to various points on the credit quality spectrum. So that would be a good way to find out. And then, you know, if you invest in these through a 401k provider, there may be some literature associated with the funds as part of that as well.
So overall, would you say disclosure on these needs to be improved?
We think so. I mean, we've looked very systematically at the disclosure to investors in the target date space, and given how complex these investments are, we really think that the fund firms offering them could go a few steps further in explaining what's inside so that investors aren't left wondering.
What are some of the other risky assets that these funds are comprised of? Emerging market risks, how does that work in?
Yeah, a lot of the target date funds that are aimed towards younger investors invest predominantly in equities, but you know we see some target date series that invest predominantly in domestic large cap stocks, but others have very big exposure to international stocks and may own quite a few emerging market stocks that are going to have more volatility in them. So we're seeing a variety of risk on the equity end as well.
All right, Laura Lutton with Morningstar, thank you so much for joining us today to talk about target date retirement funds.